Welcome to Euroz Hartleys Finding the Front, where we get to know the people who front some of Western Australia's leading companies, providing you with real insights into the way they think and approach things, both in business and in life. So get the volume adjusted in your car or your headphones sorted and settle in for a great story. Here's your host, Tim Banfield.
Hey everyone, and it's awesome that you could tune in to another episode of Euroz Hartleys Finding the Front. For those of you who are not familiar with Euroz Hartleys, we are a proudly Western Australian leading financial services business, incorporating private wealth, research, institutional sales, and corporate finance. With private wealth, we offer a diversified range of personalised wealth management and financial services. Our institutional team form the eyes and ears on the ground here in WA for our institutional clients, both domestically and globally. And our corporate finance team, armed with deep relationships and knowledge across WA resources and industrial sectors, have a long history of assisting small to mid-cap WA companies throughout their business lifecycle. If you'd like to learn more about Euroz Hartleys and the services we provide, please do not hesitate to contact us or visit our website at www.eurozhartleys.com. Well, Finding the Front listeners, our guest today is an absolute ripper. We are lucky he could squeeze some time in with us on his whirlwind trip to Perth from Sydney. Our guest is none other than 40-plus year funds management industry icon, Mr. Geoff Wilson AO, the Chairman and Chief Investment Officer of Wilson Asset Management. There is so much packed into this conversation that it is very hard to cover it off in an intro, but there are many, many takeaways from a journey in investment management that has seen Geoff build a business that now manages some $5 billion in shareholder capital on behalf of more than 130,000 retail investors. In the first half of this podcast, that was supposed to go for only an hour, but we managed to stretch it out, we cover off on Geoff growing up, some of the sliding door moments he encountered, his career history and learnings both domestically and internationally, including working in the extravagant 80s, and then some of his insights on the impact of the 1987 crash. We then look at his views on his decision to go out on his own and kickstart Wilson Asset Management. In the second half, we go through the detail of the early days of Wilson Asset Management, the keys to its success so far, the setting up of the pioneering future generation companies to give back, being an advocate for retail investors, and the importance of this role and the challenges that come with it. And then finish off with some general questions to Geoff on funds management, investing, and important factors to consider, and these views on the markets going forward. So, without further ado, it gives me an enormous pleasure to introduce to Euroz Hartleys Finding the Front, the Chairman and Chief Investment Officer of Wilson Asset Management, and great guy, Mr. Geoff Wilson. Hi, Geoff, and thanks very much, straight up, for taking the time out of your hugely busy schedule over here in Perth for some 24 hours, I'd imagine. It's huge.
A little longer.
A little longer?
Sorry, a little less. I do love Perth, though.
Yeah, look, we are so privileged to have you take time out of your schedule to come and join us on Euroz Hartleys Finding the Front. So welcome, and thanks a lot for taking the time.
No, hey, good to be here. And as I did mention, I do love Perth. And back in, at the late 80s, I was, sort of having a bit of crisis of whether I wanted to stay in the finance industry.
Right.
And I took a time off with my then girlfriend, now wife, and we drove around Australia. And when we got to Perth, we just couldn't believe how beautiful the place is. And we stayed here the longest of anywhere. And we're saying if we could live in a city,
yep,
Perth would be the one. Like, to me, I was talking to one of the guys that's over here with me this morning. I went for a run. You got the Swan River there, you saw the dolphins, and it to me is just one of the most beautiful. Well, it is the most beautiful city in Australia, and who maybe the world.
If you're Western Australian, it sure is. So, Geoff, as everyone knows who listens to Finding the Front, we really do try and learn a bit about your background and the people who've shaped you and mentors and influences that have helped take your life in the way it has and the direction it's gone in. So my homework was that I noted you were actually born in New Zealand, but you grew up in Melbourne.
Well, the mum's side of the family, mum came from New Zealand.
Right.
And actually, she flew from New Zealand to Perth and she was working here as a nurse. And then I think on her way back to New Zealand, she went to Melbourne and then met my father, who was a doctor.
On the way through?
Yeah, on the way through in Melbourne. So we actually were brought up in Melbourne, and one of my sister was born in the UK. Dad was working over there. In those days, it was big for doctors. You know, you'd work in Australia and then you go and get some international experience and work in the UK. And they're on the boat coming back, and I think they went via New Zealand. And so I just happened to be dropped off there, as in born there.
That's
and lived there 3 months. Yeah, lived there 3 months. And Dad kept going with my elder brother and elder sister to Melbourne. And then Mum stayed there with her family, had me, and then joined him 3 months later. So I think when I went to get my first passport, you know, I rang up the Australian embassy, or whatever it is you've got to do for your passport, and said, look, I was in my early 20s, I'd like to get my Australian passport. And they said, well, where were you born? I said, New Zealand. And they said, well, you've got to get a New Zealand passport. And I said, but hold it, I lived here all my life. It was only the first 3 months. Anyway, so that's how New Zealand fits in.
That's how New Zealand came into the equation. So interestingly, though, you're one of six.
I'm one of six, yeah. And I was hey, why am I here? Maybe because I was the third. You know, so the middle child. So you're trying to prove yourself. You know?
Yeah, that's interesting.
My father was a doctor, mother was a nurse, elder brother was a doctor, elder sister was a nurse. And then I wanted to be a vet at one stage. And I got into Massey University to do vet science. And then I didn't do that well in HSC. In those days in Melbourne, you had to pass English to pass, you know, your HSC. And
yes.
Luckily, you know, maybe this is an advantage or a disadvantage. I was better at maths.
Right.
Not very good at English. And so I failed my English. So then I failed my HSC. So I actually went back to repeat HSC. And in Melbourne, you know, I went to St Kevin's and I went back to repeat at Melbourne High. And then I got in La Trobe University, was innovative.
Yes.
And they took your marks minus your English. So I got into science there. And
just out of interest, though, you know, in terms of your education, you did your primary schooling in Melbourne.
Yeah.
And then you went to St Kevin's.
Yeah. St Roch's and St Kevin's, good Catholic.
St Roch's and then St Kevin's, right.
Yeah.
And so when you were going through school, it's interesting you noted that you failed your HSC. How did you find school? Was an easy thing?
Well, in terms of academically.
Yes.
Oh, no, I think it was a challenge. I mean, I'm casting my mind back to the old days of having to do homework. I mean,
yeah.
You know, I don't know if anyone liked doing homework.
No.
I didn't, and I tried to do as little as I could. I was sort of, you know, focused on minimum effort, maximum return. Well, that was when I was at school, and you know, for some reason, you know, there's myself and a few other guys. We like gambling, like the horse races. So,
right.
So my last term at school, when we were doing HSC, we had every Wednesday off to study.
Yes.
So myself and another guy, we'd tell our parents we're going to school to actually study at school, and we'd head out to the midweek races and, you know, go to Spencer Street Station and then head off to either Cranbourne or Kyneton or Mornington and, you know, spend the day at the races. So I didn't sort of study. You know, I was a little bit under on the amount of effort I put in. But when I repeated, before I started, I don't think I ever read the books I was meant to read that year of HSC. But when I did repeat, you know, I did pay attention then. And before we started, I'd read the books. And then 2 weeks in, I got the offer to go to uni. So then Mum and Dad were away.
And then it started.
I just started. Started at uni.
If we just go back a step, I'm just trying to draw from this point where the connection that ultimately came into the financial markets may have come from.
No, that's simple. Yeah, because when Dad's father died, Dad's father invested in the market. Yeah, I'm not sure. To me, it's an interesting dilemma, or actually interesting situation where I find the market is a real challenge. So when people are intellectually challenged, people with high IQs like the challenge of the market, I think. You don't need that to be very successful, maybe which I've proved. But it's I think Dad's dad, was a doctor, and obviously they liked the challenge, and he invested in the market. And when when my grandfather died, then Dad had a choice of either taking cash or shares in a company called Mount Morgan it was.
Right.
It ended up being taken over by Western Mining. So Dad took the shares. So, like as a teenager, Dad, would usually work late. So he'd come home, have dinner after we'd had dinner, and then he'd sit in a chair and he'd read the paper. But he spent most of his time looking at this one page. And I remember I asked him, what's this page you're looking at? And it was the page that had all the share prices on, and just had numbers from my perspective. And he said, well, that's the stock market. I actually looked down. I remember it was probably 14 or 15. I looked down the list. There was one called Cox Brothers. It was a Melbourne retailer. I didn't know that, but it was Cox Brothers, and it was trading at a cent. And I thought I could afford that. So, and then a couple of months later, I was looking down the list again, and I looked down and it was half a cent. And in those days, they'd move in half-cent lots. And then a few months later, I looked and it was back to a cent. And I thought, geez, if I'd bought them at half a cent and it had gone to a cent, I would have made 100% of my money. And then about 3 or 4 months later, I was looking down the list. Dad obviously was reading it, and then I was looking down the list and I couldn't find them. And I said, Dad, where's it gone? And he said, it's gone under the company.
Harsh lesson.
Yeah. Well, no, luckily I never bought them.
Oh, right.
Yeah. And because Dad, and he loved the market. Actually, he would have done really well in Western Australia because he liked mining.
Yes.
He liked mining and he liked exploration companies, and he liked the high risk. And then very early on, a few years later, I think when I was at uni, still didn't understand how the market worked or anything like that. Again, I was talking to Dad and we're talking about the market. And then he said, if you want to buy some shares, I'll lend you some money. So I remember looking down the list and I found a company called, in those days, it was probably mid-70s. And there was a company called Timor Oil and Gas, and that was trading at 10 cents. And that was sort of one of the cheaper ones. And I had no idea what it did. Obviously, it was in oil and gas.
Yes,
the name.
It's just a name on the list.
Yeah, the name on the list. I was focused on the 10 cents. Because my logic is if I bought, and he lent me $1,000, so I bought $1,000 worth at 10 cents. My logic was if it went to 12 cents, I'll make 20% of my money. That was my logic. So it actually went to 12 cents. So I sold half, and then I thought I'll keep the other half. And then I didn't even know. It was drilling for oil. And it actually went to 30-something cents, and I sold the other half at 30-something cents. and then it didn't find anything, went back down to lower than where it was. But maybe that was bad for me because probably going to the races and winning on the first race thinking, how easy is this?
Yeah, anyone can do this.
Yeah. So that was, but Dad had, when we turned 21, he'd given us some shares. He'd bought shares for us and put them into our own name. And so, so there's a little bit of
that was the market environment in which you were growing up.
But only a little bit. But yes. I didn't understand it at all. And then after I finished uni, it was back, then we're talking about late 70s, early 80s, and it was a tough time. Economically, it was tough. Unemployment was up at 10%, and I was a qualified, I did a science degree, so I was qualified to be an industrial chemist in theory. I had a mate who was working at Roundtree Hartleys as an industrial chemist. I went and met him there, and he was in his sort of white coat and checking the cocoa powder against standards, and I thought, geez, I don't want to do that.
Right.
But it was hard to get a job. So
just there, Geoff, we often ask on Finding the Front, when you're going through school and you're having this immersion in a slight way, but immersion into the stock market, you understand a little bit about it?
No, I wouldn't give it that much credit.
Right,
Yeah.
okay.
It's a good story now because I'm in the stock market and
yes.
I've been successful in it.
It really was just a part-time,
no,
not even that.
No, just a brush.
Yes.
With it. I could have said my mum was a ballet dancer and then I saw a few moves, and I tried a few and then I was a very successful ballet dancer. So it was just a real brush.
And so when you were coming out then, did you really have any understanding of what you wanted to do with your life?
None.
Right.
Well, much to my parents' chagrin. Like growing up, of course, when you're younger, I wanted to be a fireman. The various things. I think at one stage I wanted to be a teacher. One stage, and this is, my parents would probably quiver a little bit. At one stage I thought I'd be a bookmaker.
Yes.
I like that. And yes, I had no idea.
No idea.
Yeah,
okay.
and then going for a job, the logical one was be an industrial chemist.
Yes.
But then I thought, I don't know if I necessarily want to do that. The fact is I couldn't get a job. And my last couple of years at uni, I was working down the Seaview Hotel in Fitzroy Street, St Kilda, it's now called the George Hotel. It's like the King's Cross of Sydney. That was where I worked, the pub I worked with down in Melbourne. And I couldn't get a job. Like I went for jobs at everything. I went for jobs as a trainee manager at Containers. I went for a job at Cadbury Schweppes in the marketing department. I just looked, Saturday, you look online these days, but I just looked at the Saturday paper and I applied for all the jobs I could get.
Couldn't get a job.
Couldn't get a job. And I was working down the pub. I'd been there for about a year. I was mainly the bottle shop. But then my bosses said, and to me, this is probably how your parents are so important to you.
Yes.
Where they probably ask you questions. It's probably the challenge for the parent is not to tell the child what to do, but ask them questions and get them to make the right decisions. Because I'm 22, I'm working down the pub. The guys I worked for who owned the George Hotel, they had just bought a pub in Richmond, and I was getting paid $13,000 a year. And they said, would you like to go and manage that pub? So I was 22. They were going to pay me $20,000 a year and a percentage of the profit. Now, why didn't I accept that? I don't know. I assume...
For someone who was looking for a job, it seems pretty attractive.
Yeah, and I worked there. I knew them well, really good guys, good operators. I'd been working for them for a year. Like, to me, it was probably nearly a logical extension. But for some reason, I didn't. It was one of those sliding door moments. I could have... we probably wouldn't be talking. Yeah, that's right.
No, it'd be a totally different life.
Yeah, totally. And I assume it's my parents asked me a few questions and said, like you've done your degree. And because I was a bit rebellious as a child, I think at one stage when the logic was you go to uni after school, and I think I worked out how much it cost mum and dad to send me to school. And when I didn't want to go to uni, I'd worked it out and I said, look, I'm going to go and work and I'll pay you back the money. So that was sort of my logic.
Yes,
but in the end, I sort of obviously gave in to, I couldn't rebel enough and ended up going to uni.
So it's an interesting, lead up into where you ended up because you've gone through school. HSC was tough, failed it.
Yeah.
Got into the university with La Trobe.
Yeah.
And then came out as an industrial chemist, ended up in a pub.
Yeah.
I understand you got to watch Midnight Oil and Men at Work live at the pub now and then.
Well, it was, the CVR. Yeah, one of the great things is they had a little room up the top called the Crystal Ballroom. And even though I worked at the bottle shop, I used to work on Saturday nights up the Crystal Ballroom. And that's where Midnight Oil, Men at Work, just everyone, whatever bands were going at that time, they all went through there. And literally, we're sitting, a metre away? You're a metre away from them. It was...
Pretty special.
Pretty special. And it was... Probably wouldn't work these days on health and safety, but when you're so the Crystal Ballroom is on the first floor. If you're on the ground floor looking up, you could actually see the ceiling, which was the floor of the Crystal Ballroom, going up and down, moving.
Is that right?
Yeah, that's right.
Oh my goodness!
It was, it was a.
It was heaving.
Yeah, it was heaving. Yeah.
Geoff, let's just talk about how you ended up down this financial path.
Yes.
So you've come out, you've eventually landed a job. Now, you landed a job at Scottish Amicable. That was the start of your journey into the financial services or investment pathway. Could you just give us a little bit of, an understanding on your role at Scottish Amicable and then how that shaped you? Because I know that was a pretty pivotal part.
Okay, maybe we take a step back a little further,
Yeah.
like in terms of getting the job.
Yes.
So, again, I was looking for any job and I'd applied for a whole lot of jobs. And one of the jobs I applied for, a year or so down the track, was Scottish Amicable. And, when I went for the interview, of course, typical male, prepped myself for the interview, talk a good game, and I ended up getting the job. So my then boss, a gentleman called Chris Walker, there was only three of us in the investment department. Don Brinkworth was the investment manager, then Chris Walker, and I was the trainee fund manager or analyst. Yeah, so Chris sits me down and says, look, just for the first couple of days, I'd just like you to read these research reports. So he gave me a whole lot of research reports. I read them. And then after day two, he says to me, look, I just want to understand sort of what your knowledge is. And, do you know what a PE is? And I said, no. And then he said, okay, do you know what EPS is, or earnings per share? And I said, no. So then he realised I knew nothing about the stock market.
You were green.
Well, I did. I knew nothing about the stock market, except if you buy a share. Yeah, I just understood leverage. If you bought a share at 10 cents, it goes to 20 cents, you make 100% of your money.
Yeah.
Yeah, so I knew nothing about the market. Yeah, so then at least Chris knew where he was starting with. And in terms of that being a first job, everyone, I think, says that your first jobs tend to shape you.
Mm.
And one of the great things about Scottish Amicable, they really looked for those undervalued, small growth industrial companies. And we spent, and they were big, like this is, the early 80s, and they were big going and meeting management of those companies.
Yes.
And so we spent, I remember, one of the funny things, probably the first 3 or 4 months with Chris loved having a punt as well. So we would take quadrellas. This is my immediate boss.
Yes.
A bit of bonding, I suppose. And we'd put in, he'd put in half the money and I'd put in half the money. I think my salary I was pretty much on the same salary as the pub. I think it might have been $14,000.
Right.
A slight increase from the pub a year. And I was pretty much, for the pool that we'd put in of the money to take the quadrellas each week, it was nearly all my salary. And I think after 2 months, we didn't have a win. And I said to Chris, hey, look, I'm out. Even though I can't do it anymore. And then,
We've bonded enough.
Well, of course, what happens? Then he gets the quadrella.
Always the way.
That's life. So to me, it was a great learning exercise for me. There was a big focus on meeting management.
Right.
A big focus. Like we'd go wherever it was. Like there was, in those days, there was a lot of textile companies listed. The market was significantly different to where it is now. There was a company called Maryborough Knitting Mills. So we went up to Maryborough and did our company visit up there. And then, because it was Chris and myself, then we took the afternoon off and went to the Maryborough Trots for the afternoon. But, we'd go and see a lot of companies. In those days, because the fund managers weren't going to see companies in those days, we'd sit down with the management and they'd show us their budgets and what they're trying to achieve. Obviously, these days, they don't really give you that amount of detail.
Yes.
When you go and see them. It's got to be a lot more public.
Yes.
But, and I really sort of learnt there that, you really need to spend time with the company, understand how they make money, and really sort of focus on understanding the person that's managing effectively that company on your behalf, what they're going to do with it, and just how important that was.
And that really placed a foundation on the importance of management for your career going forward.
Full stop.
Yes.
Yeah, exactly. A significant one. That's right. And the logic of sitting down with someone and sort of understanding what's driving them, understanding what they're trying to achieve, understanding clearly how they make their money. The funny thing is, we'll probably come back to a bit more of the investment, but probably about 10 years ago, I remember going to a lunch and, a broker's lunch, and they had, a CEO of a company. And I hadn't done any analysis of the company. And I'm 65 now, so I was 55. So in the room, again, I was old in the room. There was a lot of other younger fund managers there or analysts that had, done a lot of work on the company. And then they start their presentation to the company. And I just said, before you start, can you just clearly explain to me how you make money? And everyone laughed. But then he did explain. And I think what I find with a lot of people, they just assume you understand how the company makes money.
Yes.
And you've really got to drill in and understand clearly how the company makes money, clearly understand what their costs are, clearly understand what their revenue is and the drivers for those costs and revenues. And then obviously the difference between the cost and revenue is the profit. Yeah, so to me, I think a lot of people take it for granted. They look at a company as an analyst and they just assume, oh, this is how they make money, rather than sort of drilling in and
really understanding it.
Yeah, really understanding it. Anyway,
that's very interesting.
A bit left field.
No,
yeah.
no. So that foundation, you moved on to Potter Partners.
Yes.
And had quite a bit of time with them, Melbourne, Sydney, and ended up in London with them as well.
Yeah. Well, do you want a bit of flavour on that?
Yeah, I was going to say, because that was a really interesting period of time.
Well, no, we'll get to that interesting period of time, but to me it's just an interesting journey. So I'm a Scottish amicable. I've been there for a year and a half. What happened is we had actually sold quite early. Back then, this was the late 70s, just going into the early 80s. And the market was still quite strong. But we had increased our cash weighting quite significantly and we're underperforming.
Right.
And the big boss, I think he was getting kicked. So then he got Chris and myself in individually and was trying to sort of rev us up. Or would say, hey, look, we've really got to lift our game. We're not doing a good enough job, etc. So I went in and here, like I'm a 3-year-old or something like that, first job, sort of learning what it's like. I'm sitting down with the big boss and he says, look, I'm not sure if you could be a square peg in a round hole. So then I think to myself, wow, okay.
Oh, thanks.
Yeah, maybe I made a mistake. Maybe this isn't for me. And I remember that night, there was a company called Coho Oil and Gas, and they were doing a presentation that night at AC Goods, an old broker that used to be around. I went to that presentation and I'm there with, so I'm 23 and I'm probably there, the other people in the presentation, the other fund managers. I think when we're having drinks after the presentation, I was just I was in a group of another 3 or 4, and say they were in their 30s or 40s, they seemed really old to me.
Yes.
And I said to them, I asked all 3 of them, I said, what do you think the market will do? And then they didn't quite know, and then one was saying something, and I thought to myself after that, even though my boss might have said there's no place for me, like I'm a square peg in a round hole in terms of what I'm doing, I thought, hey, they don't know what they're doing, so there's a place for me in this industry somewhere.
I'm not alone.
Yeah, and they were the experienced ones. So that's how I justified it to myself.
Yes.
And then things went on and I stayed at Scottish Amicable. And I think then they employed someone and I found out he had less experience than me. I think he only had a year's experience, and found out they were paying him more than me. So then I thought, oh, well, they don't really value me.
Yes.
And so I thought, oh, well, it's probably time to go. And what I did realise around that time, it was interesting, the people in the market, like the fund managers, they were boring. Like it was really, fund managers back there, it was like they had a personality bypass. And all the fun people were on the stockbroking side. And, like I'm in my early 20s, so I thought, hey, look, that's what I'm going to do.
That's my next stage.
Yeah, and then the weird thing is, I'm getting in the lift to go to work. This is in Queen Street. I get in the lift and there was this good-looking lady, girl in the lift, who I'd seen at the pub, I think, the night before or somewhere, and we just started chatting. And I said, oh, what area do you work in? And she said, I'm a headhunter. So I said, oh, I might come down and see you. So I went down and saw her, and I said, hey, I think I need to move on. You got any jobs in finance? And this is, like I was talking about sliding door moments.
Yes.
And this is why parents are so important. And like to me, I know some people that only have one parent or no parents. It's a tougher journey. And I know that people with one parent tend to do incredible things. Like there's more, I think, prime ministers that have only had one parent, etc. But that the guidance the parents give you, the subtle guidance, is so important, because she found a job for me, and it was to work down at the stock exchange. And I think it was in sort of a communications department or something like that.
Yes.
So, and that was $19,000, and I was on $14,000. So, she organised the interview for me, and again, I don't know why, but the day before I was due to go and have the interview, I rang her up and said, hey, look, I don't want to go to the interview.
It's not for me.
Well, yeah, and why did I come to that decision? It must have been my parents sort of saying, okay, you've done this, you're doing this, is that the right course, or is that where you want to go? So to me, another sliding door moment.
Yes.
I could still be down the ASX working there. And in the end, I ended up getting, I think she I don't know, I think it was through her. There was a job at Potter Partners. And so then I went down in the research department. So then I went down there and applied for the job and ended up getting it.
And you got it.
Yeah.
And as I say, that was quite a significant period of time with Potter Partners.
Well, and also my boss then was a gentleman called Rob Thomas.
Right.
And the interesting thing is, how you learn, you pick up things along the way. And Rob, he was probably one of the best managers I've worked for.
Yes.
A really great manager. I would say, if you work late tonight, then, don't come in tomorrow morning. And it was, good with the balance.
The work-life balance.
Yeah, work-life balance. Great in terms of supporting you, helping you. Yeah, so I was in research at Potters, and I was there in Melbourne for a couple of years. And as a young child, and maybe it was because when I used to go to school, Dad would drive me to school, and then he'd keep driving and he'd drive into the city. And he was in Collins Street as a Collins Street doctor. And I suppose he used to wear his suit and his tie. And I always sort of liked that idea, I think, of wearing a suit and tie. I know, sorry, I didn't put my tie on for you this morning, but
you're looking fine.
I know in Western Australia you have very high standards of dress.
That gave you a bit of an impetus for the suit and tie.
And all that stuff. And in my head, I thought, I want to work in Melbourne. I want to work in the city.
Yes.
I like to work in Sydney. I like to work in London, and I like to work in New York. And which eventually I did.
Unfolded.
Some with Potters. The first X amount of years as an industrial analyst. And then I went to London with Potters, but I had to change. I would have liked to go as an analyst because I like that idea of working out what a company's worth, analysing it, getting that sort of competitive bit of information.
Yes.
But I couldn't. There was no job as an analyst. And Potters had just tied up with Warburg's, UBS, before the UBS deal. And I was over there. And it was an interesting time. I was on the institutional sales desk in London. But luckily, around the time I went there, this was when John Elliott was Fosterising the world.
Yes.
Foster's or Elders or Foster's ended up making a takeover bid for, was it Allied Line, I think it was, which was a big UK brewer. Like I just arrived in London a couple of months earlier. I was on institutional sales, but I was the Foster's, Elders analyst back in Australia. And Warburg's were defending Allied Line.
Right.
So they rolled me into the finance director, and I sort of just took them through how, John Elliott, how he was manipulating his profits, how, their profits weren't their real profits. Because what they would do, they would buy companies and they'd put them in as current assets, and then they'd sell the company, and then they'd make a big profit on the sale of the company, and they would go through the P&L.
Right.
So you couldn't see it. So in theory it should have been an extraordinary profit, but they ran it through the P&L. And because they were buying and selling companies all the time, it boosted their P&L. Yeah, so that was interesting. So from a corporate perspective.
Gave you a thorough insight.
Yeah.
Tell me about the 80s in terms of the lead up to the lead up
to the 87 crash.
Yeah, and then
okay.
Here you are in the 87, experiencing the 87 crash firsthand.
Well, let's go before it. The 80s was extreme. So I was working for Potters in London, was there for a little while on the institutional sales side, and then an opportunity turned up I wanted to work in New York, and then I got sort of tapped on the shoulder and said, hey, look, do you want to go and work for another broker, Macintosh, Hampson, Horgavet, or Macintosh Securities ended up being called, and ended up being taken over by Merrill Lynch. Do you want to go and work with them in New York? So I said, yeah, that would be great. So I turned up there 86, latter part of 86, and it was just extreme. So I arrived there, and this is, what am I, sort of late 20s. I arrived there, and Macintosh was part owned by Horgavet, which was a UK broker, which was then part owned by Security Pacific, which was a US bank. And we know, we've seen recently with the a few bank problems over there.
Yeah,
they've got a lot of banks.
Yeah.
Security Pacific doesn't exist anymore. It was unfortunately one of the banks that after the 87 crash disappeared. And so I arrived there, I think on the Thursday. On the Friday, they were moving offices. So I went to meet all the people, and it wasn't only, there was sort of 3 Australian people working for Macintosh, but then also we were in the Security Pacific building, and we're also working with the Horgavet people. So you had UK equities, you had a bit of US equities, you had European equities. So it was a real, only on a small scale, but a real global dealing team.
Great experience.
Great experience. So it turn up there, to help them move on the Friday, and they get a dozen bottles of Moe. And I thought, wow. And this is a bit extreme. Anyway, so they go through them, and then I went out with them, and oh, geez. That's right. I don't think I got up till about 3 or 4 o'clock the next day. It was...
For the listener, I can see Geoff's body language must have been a big one.
Well, that's right. It's just unfortunately, I didn't know. I was used to drinking mixed drinks in England where they give you hardly any alcohol and all mixer. But in the US, they give you half of whatever the whiskey or gin or whatever it is and a little bit of mixer. So, that was a tough one. But then go to work. My first day of work is on a Monday. And you've got to do an exam over there. So securities, what was it? Anyway, an exam to be able to operate over there. So, then we get to the next Friday and another dozen bottles of Moe turn up. And I said to someone, what's this for? And they said, oh, it's John's birthday. Anyway, so they all have a big night. Anyway, we're studying for these exams and then we finish studying. Then the next Friday, we finish studying and then again another dozen bottles of Moe turn up. And I said, what is this for? Oh, they said, because we finished studying. Because there's 3 of us doing the exam and we had, we just done the exam or something like that. And then literally every Friday, like in 87, it was extreme. So we had clients. In those days, brokers couldn't, they had to deal through Australian brokers. US brokers had to deal through Australian brokers to get access to the Australian market.
Right.
It was before deregulation. And one of my clients was, I'd had institutional clients, but also I had, we dealt with the brokers as well. And one of them was Morgan Stanley. And I remember the guy at Morgan Stanley, he would say, oh, look, Geoff, next Thursday, he was an Aussie, but he said, next Thursday, let's go out for dinner. I said, no problem. And he said, I'll bring my wife. And I just went by myself.
Yes.
So I'd turn up there and when I've turned up, he'd already ordered a bottle of Cristal champagne.
Goodness.
And then he'd have another bottle. And then another time he said, oh, look, actually, why don't we go and play tennis at my club? I think it was called the Tuxedo Club. And it was sort of an hour out of New York. He said, look, why don't we do it on Saturday morning? You come and pick me up. So pick him up in a stretch limo. We go out to the club or his club. We play tennis. There's me and another guy, Ewan. So there's 2 of us and 2 of them. A mate of his. We go and play tennis, have lunch there. The stretch limo waits, and then drives us home. It was just money, and the US, they getting a taxi for me in Australia was embarrassing.
Yes.
But over there it was, just cars, money. It was just extreme. There was money flowing everywhere, and around that time, and you just got absorbed into the whole thing. I remember there was a company called Private Blood Bank. I don't know if you're, anyway, they floated $1, weren't going anywhere. Then all of a sudden, what they did is they stored blood.
Right.
Well, that was the theory. They stored blood. And I was at Macintosh and they were big supporters of Private Blood Bank. And so, and we'd all be punting ourselves. So I think I bought, and they went from $1 to $3. And evidently this was going to be the way. You could store your blood forever. And around that time, AIDS was big.
Yes.
So everyone was, oh, geez.
Taking advantage of it.
Incredible. You store your blood forever. And then if you ever need your blood. And I think I bought 10,000 shares at $3. And then it was going up $1 a day. And so you're making $10,000. Because over there, of course, there's no mobile phones. So after work, we'd go to the restaurant or something like that. And then we'd ring, we'd find a phone somewhere and we'd ring back to Australia. What's the price? Oh, and it's gone up $1. So I made 10,000. Oh, another bottle of Moe. Let's get it. And it was just like that. It was just an extreme time. And to the extent where I started putting on a little bit of weight. I think I got up to 100 kilos or something like that. And I thought, wow, this is a bit extreme. And then we get into the crash.
Yeah, because it all came tumbling down.
Well, but the crazy thing is, and I was at Macintosh, and Macintosh floated, and this is before so we're a month before the crash. And I remember going into Fidelity, which was one of our clients, going to taking an analyst to see them up in Boston. And I remember looking at the market and coming out, and then the market had fallen a lot. And it wasn't, maybe it was, in those days it was 50 or 60 points. And I thought, wow, that's a big move. And over the month before the crash, the volatility increased significantly. And back in the early 80s, when I started at Potters, so when I got my first job, probably some of the best advice I was given by a very senior broker was you make your money in your second bull market. And I didn't quite know what he meant by that. But when whatever money I made in my first bull market, I lost in the first bear market I experienced. And then I realised what he was saying is you're a lot wiser when you come to your second bull market. And the 87, the bull market in 87, that finished in the latter part of 87, was my second bull market. And the market was very volatile. That month before the crash, there was an enormous amount of volatility. And volatility, that made me scared. And I sold pretty much all my shares before then, except unfortunately my Macintosh security shares, which I was working for. And then, then the crash happened. But before the crash happened, on the Friday before the crash happened, the market fell about a little over 100 points. And I went down with this is the Aussie that worked at Morgan Stanley.
Yes.
And we went and met down the pub at the close to celebrate history being made. Because on the Friday, that was the biggest point fall since 29. What we didn't know was back on the Monday, the market was going to fall 508 points. So we ended up sort of saying, oh, look, we've seen history and it had the weekend, and then come in on Monday and we didn't no one went anywhere on Monday. It was, some of the international guys were out at lunch. They didn't come back. We were there, and the market fell like 508 points on that day, and it was just mayhem.
Yes.
And it was a tough time. Like there was a number of people. Unfortunately, when there's that type of dislocation in such a short period of time, people lose a lot of money. They lose their livelihoods.
Yes.
I think a couple of brokers got shot because their clients lost money. People committing suicide. It was
very harsh.
Yeah, it was very harsh. But that was the 87 crash.
When you look at that, Geoff, clearly it had an impact on how you manage money now.
Bit more conservative.
Yeah, when you look at the outcome.
Yes.
Or you saw both sides.
Yes.
How did it shape you when you look at just your DNA? Did it change at that point in terms of how you understood the market?
After the crash, first of all, before the crash, we all knew it was too good to be true. And when it's too good to be true, it doesn't last. And we all knew it would happen at some point in time. And I remember then talking to a friend before the crash. I talked earlier about driving around Australia with my then girlfriend, now wife.
Yes.
Back around before the crash, I remember a broker when we were talking, saying, look, hey, this can't last forever. When the music stops, let's go and, let's take a year off or something like that. And we didn't necessarily expect the music to stop so quickly.
Yes.
But once the music had stopped, it was, I actually thought I was ultra bearish once the music had stopped. Once the crash had happened. And it was pretty painful because the Australian market, we had all the entrepreneurs back in those days, the Bonds and the Elliots and the Brileys and the Ariadnes, and et cetera, Bruce Judges. And the entrepreneurial index was, I think it was 10% of the market by capitalisation. And that just disappeared. So the Australian market, and this is sort of the pain, the US market fell 25%, and the Australian market fell 50%. And it was really hard when you're broking in the US because the Australian market just kept falling.
Yes.
So where the US market had stabilised. So you're ringing clients and they're saying, look, why does your market continue to fall? And why was because everyone was just bringing their money home. A lot of international money had gone in, and that was just coming home. The entrepreneurs went under, or just disappeared. So 10% of the market by capitalisation just disappeared.
Yes.
So it was a really tough time. Yeah, and actually over that time, and that's when I sort of got a little window into what it could have been like to be an alcoholic.
Yes.
Because you'd have a tough day at work, we'd all go out for a drink afterwards, and then you sort of realised, hey, I'm actually relying on that drink to sort of dull all the pain. Yeah, so it was tough. And I actually, around that time, that's when I put a bit more weight on. And then I went vegetarian for 3 months. No alcohol and vegetarian for 3 months.
Had to come back to normal.
Yeah, got the weight off. Yeah. But in terms of, what you did learn is and again, I thought that was it. Yeah, I thought the market's going to be tough for a long period of time. But you did learn that if you believe, and I remember one of my clients, I was sort of really bearish with the client. And he said, if you believe in capitalism, then you've got to be buying the market. And he was 100% right. And what I have learnt from there, and even though we had that pain over that period of time, within 2 years the US market was a new all-time high. The Australian market took 6 years to get back there, but it eventually did get to a new all-time high.
Yes.
And if you look at the early part of '87, when everyone knew the market was expensive, the Australian market I think went up 50% and then fell. Actually, it might have gone up 50% and fallen 60%. So over the year you only lost 10%. And over the year, the US market, you actually were up 8%, even though you had a 25% crash towards the latter part of that year. And so I think what it really helped you understand is that you've got to take a long-term view when you're investing. And there's a book I was looking at recently that looked at the US market over a 20-year period and said that I think the market had done about 7 or 8% over that 20-year period. And if you take out the 20 days, that's the best day of performance of the market each year for those 20 years. That's only 20 days you're taking out. You're not in the market. Your performance is zero.
Right.
So the tough thing is you can be negative to the market, but you need to keep playing the game.
You got to be in it.
You got to be in it.
Thanks for sharing that. So interesting. You ultimately end up back in Australia after that period of time. Now, I just want to take a little bit of a left field topic here, and I just want to talk about Karen. And the reason I ask this is that, we talk about people who've shaped your life and influence, and clearly there's a connection there, and it dovetails into starting WAM in essence over time.
Yeah, 100%.
Yeah.
So I come back to Australia, the early 30s, staying at mum and dad's place in Melbourne.
Yeah.
Staying in a little room out the back, and trying to work out, I've got to find somewhere to rent. And then one night, a couple of broking mates, Macintosh, I worked with, Jeff Stanson, they were going out for drinks with some people and then dinner. So I wasn't invited, but they said, come along and we'll see if we can get a seat for you. So we went along. I went along, and there was this really attractive lady, being my, well, wasn't, it was just a really attractive lady then. There was no relationship that was there. And then obviously I was very impressed with him. But and there were there was equal number of, well, actually there was one more guy. I think there was probably 12 of us, or maybe 13 of us, and I was the extra guy that had gone along. And then we went out after there for a drink somewhere. And then one of the other ladies there, I was looking for somewhere to move. She had just found a place and she was looking for a flatmate. So I ended up moving in with her and another one of her friends into a house, and they were friends of Karen's. So then I think we had a housewarming, and those days used to have big parties and big housewarmings, and then I think
one thing led to another.
Yeah, that's right. Asked Karen if she wanted to dance, and that was the start of a beautiful relationship.
Oh, fantastic! Yeah. So you're back in Australia. You're now.
But in terms of Karen, where she fits in, or because in terms of shaping your life, because to me she incredibly passionate and a real carer, and highly intelligent, very capable, and in terms of me, if I should listen to her more, to me she's a great mentor for me.
Yes,
she's always right. It just takes me a little bit of time to accept that sometimes.
It does. Thanks for sharing, Geoff.
Yeah.
So, and that's important because you're here in Australia, and ultimately you have to get to the point where you think, I'm ready to go and do something myself. And the broking side of your professional life wasn't matching with where you're at in life, and you wanted to change, and you had to look at other ways of generating a dollar.
Yeah, well, actually, it wasn't necessarily focused on generating a dollar. It was, so my daughter was 4 years of age. And in terms of work, we both worked in the stockbroking world. Like, it's a tough world. It's highly competitive. The tough thing about broking is internally it's competitive and externally it's highly competitive. And you've got really smart people operating in that industry. I mean, one of the things obviously is always what's your competitive advantage. So with our morning meetings, and it's always been a bane of every broker's research and institutional sales, how they operate. We just kept making it earlier and earlier and earlier. And I think we eventually sort of had the morning meeting at 7, so you're getting into the office at 6:45. And I just thought, I mean, there's something wrong. Like, if I can't have breakfast with my wife and my daughter, there's something wrong. So I was sort of working on, like, how can I get more balance in my life? And what does that look like? And around the same time, there was this book called The Empty Raincoat, and it talked about, your working life's going to be so much different. It only took about 30 years for these things to happen. And it said, you'll do various, you'll have various areas that you'll work in, and you won't necessarily have a job, but you'll have 3 jobs. And around that time, one of my then clients was Tim Hughes, and Tim managed Reg Grundy's money. And Reg had a big lot of money he'd made in, he'd sold out his television production business. And I remember having a lunch with Tim, and Tim said, look, why are you broking? I was at a number 10 broker or whatever it is. And I just said, hey, look, it's the fur-lined mousetrap from my perspective, is I get really well paid, but it's probably killing me. And he said, well, what do you want to do? And I said, look, I've always loved my early years as a fund manager, and I've always loved doing the analysis and picking the stocks. And he said, why don't you do that? And I said, oh, yeah, but it's a big gap and I'm getting well paid while I'm doing this. And he said, well, I'll give you 10 million of Reg's money to start if you want. So then all of a sudden I've got an option. And it's around the time where I'm thinking, hey, look, I want more balance in my life.
Yes.
So then I thought, and we all do things in threes for some reason. But then I thought, okay, what I'll do is I'll set up a little funds management business, manage the $10 million. I'll write a book because, we all want to own a racehorse, own a restaurant, write a book.
Yeah.
And I'll maybe go on a couple of boards. And so I'll have a bit of a portfolio. And then what happened was, so I went on a couple of boards. Tim was a major shareholder in E-Trade, so I went on the broking board, not the public company, but the subsidiary of the broking board.
Yes.
Went on Cinema Plus's board as well, and which was a listed company. And then I started writing a book with a gentleman. I thought, what can I write about? And I thought, well, it's really got to be the market. And English wasn't necessarily my strong suit. So I thought, look, why don't I do similar to the Market Wizards guy? Why don't I do a question and answer for fund managers? And I asked Matthew if he wanted to ghostwrite it for me, and he said, no, I'm happy to write it with you. I said, great, okay, let's write it together. And then let's start with that $10 million. So resigned from broking, this is 97, sort of October 97, thought, okay, I'll start on the 1st of Jan 98 with the fund. Try to work out, like in those days it was pretty cheap to put it together. And go and talk to anyone you know. And I know Paula Dwyer, who has been incredibly successful on the boards since then. She was setting up a funds management business. So she had a trust deed. And I said, oh, look, I think my lawyer's going to charge me $5,000. Can I use your trust deed or so?
Yeah.
So she gave me a copy of her trust deed and just change it. You nickel and dime and get it going. And then I went to Tim. I was ready to go on the 1st of Jan. This is sort of in December, and say, look, hey, everything's good, ready to go on the 1st of Jan. I said to Tim, and Tim said, how much are you putting in? And like all the money I had in the world was $500,000. And I said, look, I'm putting in my $500,000. He said, I'll match it with $500,000. So all of a sudden I'm starting with $1 million. So I'm thinking, oh, well, where's the 10 million? Well, I couldn't push him.
Steady up, buddy.
That's right. So we started with $1 million and then started writing the book. And then Matthew, he was editor at Sydney Morning Herald, business editor at Sydney Morning Herald then. He was getting a bit disillusioned with journalism because that was around the time Hart was having his problems with Burnsville.
Right.
And the journalists, like he did nothing wrong, but the journalists were pretty brutal. Like he bought Burnsville too high and had to recapitalise it. And Matthew sort of was very principled and said, I just I'm not that keen on the way journalism's going. And he said, I want to get into funds management. And I was writing this book with him. So I said, oh, no problem. And he ended up getting offered a job with someone else. And I thought, oh, God, like I'm writing a book with him. I don't want him to go and work for another fund manager.
Yes.
So I think we had about $4.4 million of fund. So the annual fee was $44,000. This was sort of April, May 98. And I said to Matthew, look, why don't you come and work with me? And I thought, he can work as an analyst and then we can do the book together. And he said, well, I need to buy a house, so I need a salary. And I said, because I just said, look, can I just pay you out of the profits if we make any? And he said, no, I actually need a salary to get a loan. And I said, what's the minimum I have to pay? And he said, $70,000. I said, oh, great. So I'm losing, before other costs, I'm already down. I'm down. So anyway, my logic was, hey, if I can't get it up in size, then I'll have to downsize at some point back to one. So, but luckily, we grew it from that 1 million. I think Matthew joined us 4.5, and a year later it was sort of 14.5. And as you said, now I think it's 5.2 billion, and we've got 130,000 shareholders. So it's been a long game, but we've got there.
What a story! Tell me, why did you adopt the listed investment company structure in the first place versus an open-ended unit trust?
Yeah.
That must have been a pivotal point.
Yeah, it was interesting. When I set up Wilson Asset Management, again, for some reason we all get fixated on threes. So the logic was, and this was literally at the very start, we'd set up a pool development fund, which was sort of a lot more a venture capital one. I'd set that up while I was broking.
Yes.
And it was there if needed. So, we had $5 million in that, I think. So we had that to manage. Then we actually started with a unit trust structure. So we did start with a unit trust structure. And that's the one, I put my $500,000 in RG Capital, and they ended up putting more in money over time. And then around that time, James Churnside, he was a fund manager that I used to broke to, he gave me some research that Morgan Stanley in the US had done about the closed-end funds over there versus the mutual funds or the open-ended trust structures over there. And it was over a 50-year period, and those closed-end funds had outperformed by 2 to 2.5% per annum over that period of time. And
yes.
I just thought, look, what a great structure, because what it does, one of the great positives about the closed-end fund is you never have money running in at the top of the market, or running out at the bottom of the market. And the average investor, he tends to buy at the top and sell at the bottom. So he gets, whatever, say the market does 10%, he gets 5% return.
Yes.
Because he's always doing the wrong thing. So it was a great structure that you were never forced to buy at the top or sell at the bottom, and you could take a medium long-term view. So I thought what I'd do is, we'd have the little venture capital thing, we'd have the trust structure, the open-ended trust structure, and then we'd have a listed investment company for sort of more the retail people. And that was WAM Capital. We floated, raised, it was 20 mil, it was oversubscribed, so we got a little bit more than 20 mil when we floated that in about a year and a half after we'd been.
So that was in 1999?
99, yeah.
Geoff, just on your first listed investment company, clearly you were out on your own doing it yourself with Matt?
Yeah, with
Matt.
Matthew.
And how did you go communicating with, your proposed clients about, and I'm coming at it from a point of you set a foundation for the business when you went out there and you raised that first round in terms of engendering trust within a client base?
Not necessarily.
No,
I think I'll take the credit. The great thing is, we can write history now. Thank you. I'll take that credit. But no, the answer is no. So there where, no one knows who we are. We went around to, of course I had relationships with the brokers because I'd worked in the broking industry. So I went around all the brokers, and Macquarie and E-Trade were the brokers to the issue. There was a listed investment company that I wanted to use as a shell, and there was a weird situation happening. I bought 10% of it on market, and someone was going to sell another 10%, but I was waiting for it to come on market, and Renee Rivkin bought the other 10%. And this was before we floated WAM Cap, and we were going to use that. And then Renee was going to use it for his unlisted thing. And so when we floated WAM Cap, Rene wrote, he had his newsletter in those days.
Yes.
He wrote WAMCAP up in his newsletter.
The Rivkin Report.
Exactly, the Rivkin Report. Yeah, so I think I was just talking we're on the roadshow now seeing all our shareholders. And in Sydney yesterday, I think we had probably 600, 700 shareholders there. And I think one of them was reminding me, Rene came from the Rivkin Report. So they were the ones that wrote us up. And so we started with a little over, 21.5 mil. A lot of people you'd go to then and they say, listed investment companies, they trade at a discount. So I'm not going to buy them. And to me, there was no logic, there's no logic for them necessarily to trade at a discount. From my perspective, it was a supply-demand equation.
Yes.
And if you had equilibrium, it should be NTA. And the premium to NTA isn't equilibrium and the discount isn't equilibrium. So that was my logic. And so we started off with WAM Capital and for we had a cracking first 2 years. And we paid a 3-cent dividend for the first year. And because we had such a good year, we paid they were dollar shares, and we paid another 8 cents fully franked. So the first year you get 11 cents. The second year we paid 4 cents. And then we had a cracking year, so we paid a special of 8 cents. So in the first 2 years, on your dollar, you got 25 cents back fully franked. But we're still trading at a 20% discount. So don't worry, no one had found us. And it was a battle. And it just takes time. It takes time to tighten up those share registers. And what happened is, the interesting thing is, we started off, and of course all the money came from the brokers. Rene's people or the brokers, and we marketed the brokers, and that's where all the money came from. And so we thought, well, logically, we should go back to the brokers and market to them. And what we realised is the brokers, that we were seeing, that they were actually, we were nearly competing with them because they give their clients the good ideas of stocks to buy. And that's the area, and we want them to buy us because we find those good ideas to buy. And so what we realised is that we realised, we started with 2,000 shareholders, and this is the ones that loved you.
Yes.
Within 2 years, we'd lost 35% of our shareholder base. We're down to 1,300 shareholders. And we realised, and they're people that had bought in and they didn't know what we wanted to do. I remember before we floated, a guy rang me and it was a $1 float and said, before it listed, do you think it'll come on at $1.10? I thought, well, he's going to sell. We won't meet his expectations. So It just takes time to align the people with what their expectations match what you can deliver.
Yes.
So, we lost 35% of the share register in the first couple of years. But what we realised is the people were buying were our shareholders. So what we stopped, really focusing on just going and seeing the brokers, and we started doing presentations to our shareholders. And then we're doing Sydney, Melbourne.
So it's direct to investor.
100%. And here today, we've got 400 shareholders that are going to come along to the presentation. And that's what we realised. We started communicating with shareholders. And to me, I like that because that's where you get the information and the bond and everyone's got something to add.
Yes. So Geoff, it's really interesting you highlight this because you've gone on to now build a portfolio of 8 listed investment companies. As you said, around 5.2 billion in shareholder capital and 130,000 retail investors. Now, you've gone from, say, 2 to 130,000.
Yeah.
It's phenomenal.
It is a bit of growth, yeah.
And this leads to a number of queries around, or just questions, how have you been able to do it? And the connection, I've seen you present at an Australian Shareholders Association presentation, and the connection you have with your audience is, to say it's strong is an understatement, okay? And the way that they respond and they attentively listen. And I saw you present once, this was a number of years ago, and you were able to highlight to them out of your portfolio of listed investment companies, the ones they should be looking at and the ones they should leave alone for a while. And it was really quite interesting the way they were just really absorbing it. And I look at it and I think, well, how have you been able to do that over such an enduring period of time? It's a long period. It's 26 years since you've started. Is it the listed investment company business model with the franked dividends? Is it the communication that you just highlighted? Is it the investment and performance return? What are the sort of the triggers that have been able to enable WAM as a company or as a fund manager to continue to do what they do and do it so well?
Okay, geez, there's about 10 questions
Yeah,
there.
there is, and I'm conscious of that.
Well, let's where do we start off with? In terms of the simplest thing is to be honest,
Yes.
because and the beautiful thing is, see, ours are listed investment companies, so it's not an open-ended trust. So what you tend to find is most fund managers are always bullish because they always want someone to put money in their fund. So we haven't got that pressure, so we can be really honest. If we're nervous and think things aren't great, and also, with the listed investment company, the NTA is what the listed investment company's worth. So if it trades at a premium to NTA, then you're paying for performance. And hey, I was brought up, buy a dollar for 50 cents if you can. Like always, be as frugal as you can in terms of investing. So to me, honesty with the shareholders is important, and also, maybe it's the advantage of being one of 6 kids. So, so in terms of, communicating, I'm very comfortable communicating. I actually like people. I actually like people's stories. I'm fascinated. I know we're doing this. I'd love to do one on you, a podcast, because I'd love to hear your story. Everyone's got a great story, and the frustrating thing is, you tend to only hear the stories at their funerals.
Yes.
So to me, everyone's got a great story. I remember one of our shareholders. He was in the Air Force, and I remember. Now this is probably 23 years ago. I remember he was in his 80s. I don't think he's still around, but he was hopping on one leg and just saying, and just showing how fit he was. But just interesting stories. And to me, it's what we try to do as a business is really communicate well to our shareholders. And I think a lot of people unfortunately don't do that. And it's good and bad. And but you just got to take both. And what tends to happen is, like when we get a bad email from a shareholder, like we've got 8 or 9 people in the shareholder engagement comms area.
Yes.
They could deal with it, but I'd prefer to ring them.
Yes.
And communicate to the people. So to me, it's just a bit of a mindset. The funny thing about listed investment companies, it is so simple what you need to do, but it's so complex in terms of doing it. Because broadly, for a listed investment company to trade at NTA, what it's worth, you need to stop all the selling below NTA, and and have one person to pay NTA or a premium. So it's very easy to say that. What's happened is, and we've taken over, I think probably 8 or 9 or 10 listed investment companies over the last little period. A lot of people think, oh look, it's a great structure, and it is. And the great thing about the structure is, like, to me, it's nearly too good to be true. You can manage a pool of capital, and you can buy it. You're managing it, and it's worth $1, and you can buy it at 80 cents. It's nearly unbelievable that you can do that. And so to me, that's another a real driver. But it's just a lot of fund managers think, oh, it's great, I'll set up a listed investment company, and they don't give it the care and attention that it requires. And it does need, it does need a lot of care and attention. Well, or the shareholders, you need everyone understanding fully what you're doing.
Well, I was going to say, there's an old saying, a funds management business is only as good as its clients. And the clients have joined you and aligned themselves with you to the point where you've got 130,000.
Yeah.
And that alignment has come through a number of areas, as we've just discussed. But your communication strategy is thorough,
yes,
to say the least.
Yes.
And it clearly is effective in terms of the message you communicate and when.
Yeah, and like I remember a few months ago speaking to a shareholder. I think he put some money into an AMP trust, and he was upset about it, and he'd been ringing them, and I think I don't know who came back to them, but he was pretty frustrated. And then he bought one of ours, and he sent us an email. He was frustrated about something, so I rang him back, and he just he told me the story. He said, like, it's just a different it's a different communication method, isn't it?
Yes, yes. I just wanted to say that success of Wilson Asset Management has gone on in another way, and that is in 2014-15 you set up the Future Generations companies. And for the listener, I just want to highlight this in terms of Wilson Asset Management through Geoff created the first listed investment companies in Australia to deliver both investment and social returns. And these are Future Generation Australia and Future Generation Global. And they were designed to create or meet two objectives. Firstly is to provide that steady stream of fully franked dividends, but the other was to deliver critical funding to not-for-profit organisations working to improve the lives of young Australians. To date, Future Generation has donated some $65 million. I mean, can you believe this? Yeah, it's quite.
I actually can't believe it.
Yeah, it's when you look at it in the strong, cold hard light of day, that is a phenomenal achievement. Now,
and we'll do 10 million a year forever.
It's an annuity. Yeah. So, tell me. I mean, clearly there was a passion from yourself, but also within the team to give back. And when I say give back in terms of a word to use to explain it, there's probably a lot more to it. But how did that come around?
I suppose if you go all the way back, when you set up a company, and initially it was just me, and then it was me and Matthew, and then now we've got 55 people, and you sort of when you're trying to work out your why, like why do we exist, and we did that a number of years ago, and what we concluded is why we exist is to make a difference. Now, initially, the make a difference was, like the logic of setting the business up was I put my money with someone else's money, and we can be seen as an institution, so we get access to all those things they do. We get access to companies, we get placements at a discount, we get IPOs. We get that competitive position.
Yes.
So it was, that was sort of the logic of, making a difference for the investor. And then I suppose it's like Maslow's hierarchy of needs. As we go up, as we've got food and shelter, then you can make different decisions. And then as the business has grown, it's, okay, we're not only going to make a difference for our shareholders, our investors, but we can actually sort of support the community we operate in. And like in the early days, things like, and I'm a big, well, do I believe in, is it democracy or is it benevolent dictatorship? I'm not sure, but I remember years ago there was only 10 of us, and someone would ring up and they'd say, "Oh, can I speak to the boss?" And I said, "Well, we don't have a boss. Like we're all equal."
Yes.
And another thing we've done is, in the old days, we'd, like in terms of someone would be raising some money for something, so I'd make the decision. So we'll give them X amount, $5,000 or $10,000. And so what we decided a number of years ago, look, we'll give everyone, they've got their normal salary, but we'll give everyone that works with us, we call it WHAM Gives, we'll all give them $10,000 to give to whatever charity they want each year. Because all the science, it doesn't have to be your money. You still get the positive benefit of giving the money.
Yes.
So to me it's...
It's extremely generous.
Well, it's just sort of a way of democratising what we do and that internal giving thing. I mean, we still give money to various causes at the corporate level. And maybe it's being one of 6 kids, and maybe it's going on my dad's Saturday morning. He'd go around and see his patients at their homes, and I'd sit in the car and wait for him. And maybe it was it's a bit of that. And Mum was be involved in various organisations. Maybe it's that sort of learning at a young age to the part of living in a community is giving back.
Yes.
And then with the Future Generation entities, the fortunate thing is I was in the UK, 10 years ago, and reading the FT, and I saw this guy, Tom Henderson, is related all the way back to Henderson Asset Management, but he was a hedge fund guy, and he was setting up effectively the structure that I copied to set up Future Generation. It was called the Battle Against Cancer Investment Trust.
Right.
So I just thought, what a great structure. and I'd love to do it in Australia. And actually, this is we started our roadshow for Future Gen. We started. Where do you start your roadshows? Here in Western Australia,
Perth.
That's right.
Yeah.
In Perth. Yeah, I remember. Yeah, I can remember as it was yesterday coming over here, and we thought, oh look, we'll be lucky to raise, 30 mil, 40 mil, 50 mil. Yeah, and it was oversubscribed, and now there's $1 billion in the two entities, and so that's 10 million a year goes to support youth at risk and youth mental health. And to me, the great thing is, the broking industry have been great supporters of it. The fund management industry, like they're managing the money pro bono in their main funds. To me, the finance industry is incredibly generous, and it was to provide a vehicle for it to be obvious, I think, their generosity and the 65 million. That's the finance industry. I've just put together
The vehicle.
the vehicle for it to happen. So
Geoff, it's very, very impressive.
yeah,
To follow on from that, it was around 2018. Correct me if I'm wrong. You were awarded an Officer of Australia, of the Order of Australia,
Yeah.
for services to the business and finance sector, professional financial bodies, and the community as a supporter of charitable foundations. That must have been a pretty proud moment.
yeah, it was. I don't like the word proud,
Right. Okay.
but yeah, it was. Yeah, a great
Recognition.
surprise and well, I wouldn't say recognition, but to me it was quite an amazing situation. One of the sort of sad parts about it is you sort of like someone puts you up, and it takes you a while. You get a letter in the mail and you think it's coming, so you know it's coming, and then because you've got to say whether you want it or not, and then you get it. And that's when it becomes public. And then I wanted to backtrack and find out, well, who put me up?
Right.
Yeah, well, I know, but the sad part is that Ron Walker, Ron who, Lord Mayor of Melbourne, was chair of Fairfax for a period of time.
Right.
Set up Hudson Conway with Lloyd Williams. I came across Ron when he was setting up Hudson Conway, and I was broking in New York, and we took him around to see clients. I remember it was a funny story. It was a small construction company, Australian construction company, coming to New York, wanting to go and see investors, and we couldn't get anyone. There was hardly anyone that was interested. So luckily I got this guy, Steve Silverman. He's a fund manager. He was at Merrill Lynch, and they're out in Princeton, and it takes you about an hour and a half to get out there. So, in those days, because limos, this was before the 87 crash. This was, just probably about 2 months before the 87 crash. So Ron comes over, and normally you'd have a full roadshow. You're taking him to see 20 clients.
Yes.
And I said, Ron, we're just going to do the special ones. We're just going for the bullseyes. We're not going to just do the scattergun approach because effectively we had no one. And I said, we're going to spend most of the day just going down to see Steve. And so we go down, and he would never the company would go in with Steve, but he wouldn't. I had to sit in the limo, wait. And then, so I had a good chat with Ron on the way down, and this is, that's what I said, 87. And he went and saw Steve and on the way back. And then he went back to Australia, and then Steve bought 10% of Hudson Conway, gave me an order to buy 10% of Hudson Conway. So anyway, I met Ron through my Macintosh days, and when we were set up the fund, Ron put some money in the fund, and actually he was on one of our boards, one of the listed investment company boards for a while, and then unfortunately, he got sick, he got cancer and fought it, and has done an incredible job. It was melanoma cancer, and he got the drug actually put on the pharmacy schedule, so
Right.
Australians can get it, and he was flying to America to get it to America, and it prolonged his life for quite a period of time. And unfortunately, so I get my AO, and it took me about 3 or 4 days to find out who put me up. Ron put me up. So then I rang him to thank him.
Yes.
I never spoke to him.
Oh.
That was the day he died.
Oh.
Yeah, sad.
Very sad.
Anyway.
Well, I mean, the fact that you were awarded it.
Oh, yes, it was nice.
Very nice.
Yeah.
Very nice. I just wanted to cover off too, Geoff, on the flow on from establishing such a business and the future generations and having this retail investor base of 130,000 has enabled you to do things that aren't really within the reach of others. And I say that in terms of your professional skill set and being able to advocate for retail investors on a variety of issues that are tangible to them. And you're well known for being a champion of the retail investor. And it's only as recent as today. I saw it in the Australian Financial Review, and there's a headline, "Total Ignorance. Wilson warns franking changes will cost the budget." I go back, you had a huge effect in 2018-19 when Bill Shorten tried cracking down on the franking credits, which he later admitted was a policy that might have cost them Labor the election. You had a huge role to play there, advocating against virtual AGMs, and currently on the front foot, advocating on government's bid to raise additional funds by modifying the legislation on franking credits. Tell me a little bit about your mindset on this in terms of you're in there and you're batting away for the everyday investor, but you're also clearly looking at it from your own perspective as well. Can you just give us and the listeners a bit of an insight into this? And because it is why and also the way you go about it to be able to make a difference. It's a big thing.
The why is effectively the retail investor has given us a license to operate.
Yes.
So fund management is a very profitable business. And effectively it wasn't for our 130,000 shareholders, then whatever wealth that the 55 people that work at Wilson Asset Management have, it wouldn't be there. So, we have to be indebted to them.
Yes.
And the reason why we do these roadshows is because it's their company. And as we're both investors in the market, how many times have we seen management and boards that haven't stood up for shareholders and, done the right thing by shareholders? So, like deep down, it's about doing the right thing.
Yep.
And it's thanks for the examples you use there. Everyone thinks that we're one side of politics, and we hit the Liberals as hard as we could on the virtual AGMs as well. So, we're standing up for what we believe. It's just the fact that Labor happens to have done more that we've tried to stand up against. And so that's where it comes from. And as we've grown as a business, then we can be more sort of strategic and it does take a lot of risk. But back in 2018, 2019, when we started, it was March 2018 when they announced the policy, and we started that day advocating against it. Some very senior business people, and this is probably when we're halfway through it, said, "Look, Geoff, why are you doing this?" Because everyone knew Labor was going to win. Even the night of the election, Libs was still 6-1. Everyone knew Labor was going to win. And then I thought, I'm going to get a tax audit. I'll probably have ASIC on me. To me, and they're saying, why do it? You're just hitting your head against a brick wall. Isn't it stupid? And for us, it did get very personal. Back in February, it's dirty. Politics is a dirty, dirty game. I'll never go into politics.
Right.
You think, we work in the corporate world. You think that's tough, but it's just effectively we're is it the Queen's, was it Queen's rules of boxing? We're all above the belt, where politics is cage fighting, and we got pulled into that when I think Bowen was saying that he's had access to a secret conversation I had with my third cousin once removed, Tim Wilson, and about the franking credit stuff, and that was a shareholder call which he did in September 18. We put it on our website in September 18. It's still on our website. But they just twist it around, and So to me, would I do it again? 100%.
Yes.
And actually, we are doing it again, and each time it's slightly different. Where then it was an election, where this has got to be more sort of hand-to-hand combat.
Yes.
So we've got to, what we need to do, there's a Senate inquiry next Tuesday, which we're presenting at. We need to get the Greens and or Pocock to block it in the Senate. And that's what, we met with the Greens, met with Pocock, met with a lot of the Liberal people, met with some Labor politicians. But Albanese and Chalmers, they won't meet with us. We keep asking them. But that's their thing. And why we're doing it is we believe that, what they're proposing is will be negative for the Australian economy, Australian investors. I mean, and actually the weird thing is, someone asked me yesterday, they said, oh, well, this, what about this just helps the old people? The bit of legislation that we're really cranky about is the one that stops a company from paying a fully franked dividend if a dollar of capital that's raised at any point in time, either before it pays the dividend or in 100 years after it pays the dividend, if the ATO say that dollar helped them pay the dividend, the whole, it could be $100 million dividend is unfranked. And that's, particularly over here, small growth companies.
Yes.
You lose money, you finally make some money, you pay tax, you want to pay a fully franked dividend to your investors. It allows you to raise money at a higher valuation, and you can use some of that money you raise to pay to fill the funding for the dividend. Now, to me, it's just illogical, and the impact that'll have, it's actually going to be on the younger generations. They're the ones it's going to have impact on. When you won't have there's 2.5 million small companies in Australia. They are the lifeblood of Australia, and the large companies have got excess franking. They can either borrow money and pay a fully franked dividend. They can't raise capital. Or if they got excess franking, why bother investing in Australia? Let's invest somewhere where I don't pay the tax. So to me, it's illogical. And unfortunately, I just don't think they understand. I think Treasury understand.
Yes.
I don't think the politicians understand.
So when you look at it in that light, it's a very important role you're playing.
We think it is.
Yes.
Yeah. And that's right. That's sort of what keeps driving us.
Yes. Thanks for that. And as I say, it's only just, again, a topic that is clearly coming out in the press at the moment. And how do you feel about how it's going to unfold, this current one?
Yeah, well, we've got to stop it in the Senate.
Yep.
Yeah. That's the goal. Well, the last one was stop it in the Senate as well, because we all knew that Labor was going to win that election. So we were campaigning against Labor effectively, or campaign, for the franking, for them to stop that. And then we'd started, literally the week before the election, we'd started meeting the senators so we could block it in the Senate. But then, of course, Labor lost the 2019, the unlosable election. So we never had to keep going in the Senate.
Mate.
Unfortunately, this time there's not an election.
Gosh.
Yeah.
Geoff, I'm really conscious of time. I've just got some general questions. You've been so generous with your thoughts and your insights. These are general questions around where we're at the moment. If you had some advice to give some emerging fund managers just starting out who are looking to try and raise capital, what would be your 30-second overview on how you would help if they came to you and said, oh, look, I just need to get started, Geoff? What are some keys?
Well, some great advice Greg Perry gave me when I started off the funds management business. And Greg, an icon of funds management, and retired a number of years ago. And he said, in terms of investing, he said, look, just really, do your homework and focus on not losing money, in terms of your investments. And I suppose he was saying, don't take too much risk. But in terms of building a business for the fund manager, it's tough.
Yes.
And just get the track record, build the relationship with the clients. Yeah, and I think we do surveys of our shareholders. I think the highest way we get a new shareholder, I think 28% of the people that respond say it was referral. Like someone said, oh, look, someone's told them that, rather than a financial planner. Or I think it's 20 in the mid-20s.
Yes.
So it's, you just got to...
That's very powerful.
And be open and transparent. And it's communication, isn't it?
Following on from that, you talk about losing money. How do you personally handle losing money in an investment? If you use an analogy, like a good Western Australian analogy, you get caught in a cray pot. Once you're in, you can't get out.
Yeah.
How do you hold? I mean, in some cases you can't get out, but do you hold your losers? And to what point do you call it quits and say, right, let's move on? You
must have been looking at we used to have a category. I think it was cray pot.
Oh, did you? It's an old analogy.
That's right. Oh, with the losers. I mean, you're always going to make mistakes, aren't you? And to me, it's the quicker you accept you made a mistake, the better, isn't it? And I tend to like to sell them.
Yes.
But I do, if there's a little bit of hope, I do hold on, because, as I said years ago, we used to have a little category, which was the K-pop crack, and some did come out of there, and some. I remember when I'd say to Matthew, "God, we should have kept that." Yeah, like or look remember what that happened with that one, or it's difficult. It's difficult. Like if something's changed significantly, then you got to. To me, the biggest thing is accepting you made a mistake.
Yes.
And sort of like I like getting it out of the portfolio, then I don't see it anymore.
Forgotten.
Yeah. But if you think there's a chance, then obviously you keep it.
You referred to it earlier. One of the key aspects you look at when you're investing in stock is management number one.
Yeah, I think manage because just like say if people are giving us money to manage, and hey, and I'm the old guy, you're giving money to the people that are managing those those various 8 funds, the senior portfolio managers. So you have to make an assessment of them, whether you believe that they're good enough and they'll perform on your behalf. And yeah, to me, it's management's incredibly important. I know Buffett says it's more the franchise of the business, and I think that's if you take a like a 20 or 30 or 40 year view, or a long term view, because eventually his logic is that management will get replaced, and you'll end up getting good management there. My view is I want someone who I think is going to deliver for me.
Yes.
Managing, and so management is very important. Like effectively, we're a little rating system. It's management. We rate it out of 10 and multiply by 2, so that's 20. Then it's earnings growth, because to me, the greatest correlation of a share price in anything, I know people can say it's cash flow or et cetera, is earnings per share growth.
Yes.
Then it's valuation, and then it's industry and industry position. And then we try to wait until we can see a catalyst that's going to change the valuation. Because some stocks can be cheap for a long time.
Yes.
And it's trying to identify that catalyst. And it's more with us is, have we made a mistake with a catalyst? Or, we expected an earnings surprise and it wasn't. Or it ends up being a downgrade. And accept you made a mistake and move on.
Yes.
Yeah. And with investing, I think one of the big things, and I'm sure probably most of the people listening to this are investors. So, and this is the thing, you just got to work against your emotions. And that's the thing you learn. So when you see the market falling, initially you feel, oh, wow, you feel the pain, but you've got to successfully turn that around to be like pleasure. Oh, this is going to be great. I'm really going to find some great opportunities here. And working against your emotions is great on the investing side. And I think that's why a lot of people on the investing side are a little bit eccentric, because they're a little bit on the spectrum somewhere. I think we're all on the spectrum somewhere. Yeah, it's really working against your emotion. And I try to take a medium long-term view. And the tough thing about working against your emotions, if you're really good at it, it's not good for home life if you're too successful on shutting down your emotions.
Oh, gosh.
So my journey for the last 20 or 30 years is to turn up the volume on my emotions.
So it's an interesting point you make, though, is that you said earlier that you make your money on the second bull market.
Yeah.
Well, you've got to endure a couple of downturns to almost be able to do what you're saying.
Yes. And to me, that's
experience and being able to buy when there's, as they say, buy when there's blood on the streets.
Yeah, exactly. And like the tough thing is that's why I'm a bit hesitant about the market now. Now the tough thing, I know well,
that's one of my questions. What's your view on the market over the next 12 months?
I know we talked about it earlier. I'll tell you the view, and then, maybe I'll put the caveat now. And we talked about it earlier that, I think the US market over a 20-year period, if you miss each year the best day, so 20 days, your performance wouldn't be 7 or 8%. It would be 0 if you miss those 20 days. So it's really time in the market. So it's nearly irrelevant what my view is of the market, because you should be in the market. The question is how much cash you keep for if the market falls 20 or 30% and you don't feel any pressure to sell. And that's what I would be at the moment. I'd be a bit I'd be cautious. And the reason I say that is, we've had, we talked about 87. I talked about when unemployment was 10%. We've had bull markets, bear markets. We've had over time, recessions, where everyone loses their job. A lot of people lose their job, the like. Here we had a period up until a couple of years ago, so the longest bull market in bonds, record low interest rates, which push valuations up. And over the last couple of years, it's been, since COVID, obviously there's been, a bit of the excesses have come out of the market. I just don't think enough of the excesses come out. That's what, I think a lot of people that have made, when you hear stories about people making really easy money,
Yes.
it's not easy.
No.
So as soon as I hear a story about someone making some really easy money on Bitcoin or something like that, well, they're going to have to lose that because they've got to realise that it's not easy. And, so that's, maybe, one thing monetary authorities have been in terms of their willingness to pump money into the system, since the GFC, they learned, effectively when they let Lehman go,
Yes.
they learned they made a mistake. And they had to backpedal on that. And then, with COVID, they've learned, hey, we just got to pump money in the system and we got to pump it in quickly. And even with, the bank crisis, recently,
Yep.
they're just pumping it into the system. So whether that can keep us from a bear market, like it's bizarre. We haven't even had we're not in a bear market in Australia. We haven't had one.
No.
There's got to be some pain at some point. I just don't know when it is.
Do you think the interest rate environment's going to have an impact, further impact? Or do you think
I would have thought so.
Yes.
I'm more. I know everyone's saying, inflation will get back to the levels it has. Like there's a few structural things that as a world, it's not as efficient as it was. Where everyone's sort of bringing their manufacturing home, or so there's an implied inflation cost there, and money spent on defence, and there was the peace dividend. Remember, when the Berlin Wall came down, equity markets went through the roof over because there was this big peace dividend. Well, haven't we got the reverse of the peace dividend now? So, to me, I'm surprised that the market's sort of going so well. But the tough thing is you got to stay in it.
Yes.
Because you don't want to miss those. You don't want to miss one of those 20 days.
No. Obviously, we don't want zero. You're in Western Australia. I can't not but ask you, what's your view on the electrical vehicle, thematic and the metals that drive that, the future-facing metals? How does WAM look at that?
Well, obviously, we'll look at any ways to play that. I know the large cap guys, play it. The fascinating thing is, and the great thing about being in West Australia is, remember the Sarge engine, and that didn't come to fruition I'm not sure for a number of reasons. But what we do know is the electrical vehicle, that will come to fruition, and effectively we'll all be plugging in our vehicles eventually.
Yes.
So, the question is, to me, I should be referring to you. You're here on the ground, so you know exactly. You have the best quality information. That's why you talk to the CEOs or the management, because they know exactly what's happening. Because we're positioned on the East Coast, we've got a significant disadvantage. So you know exactly what's happening here. But as a theme, obviously it's just a great trend. The electrification.
Yes.
It will happen, and eventually it'll be like, everyone will, whether it's our children's children or, you had a thing called petrol.
Yes, diesel.
Yeah, geez. It's sort of like when I grew up, we used to put briquettes in the, and we still had one of those briquette fires.
I remember that.
The sort of squash coal. Didn't have it for long. I was pretty young. That's right. But you say, your petrol. Are you serious? You put petrol in a car?
I know. Geoff, my last one is I've heard you say you run by the idea that anything is possible.
Yeah.
Right? And I just wanted to possibly look at your insights in hindsight of your life and your successful funds management business, what you've been able to do on the future generations front, what you've been able to do as an advocate for the retail investor. I put that, into the context of anything is possible. Just what are your takeaways on that in terms of when you look back at your life? Did you think at the start, oh, gee, there's no way I would have been where I am now?
No. Well, luckily I didn't think that, and I never necessarily wanted to be there. I do know. I remember when I opened my HSC results, because we used to get them in the mail there, I cried. I remember that. Because always an optimist. I thought I'd passed. Well, I had actually passed my number. I'd passed, but unfortunately, because I'd failed English, I failed. In terms of anything's possible, to me it is, like anything is possible. And, well, I mean, to me, here's a great example. That's right. Someone who thought it'd be an industrial chemist what's helped me along the way is, I think that belief that anything could be achieved. And I think it's important to discuss it as well. Like if you want to achieve something, I remember when I was on the broking side, there was a young guy who's working out the back end research, and he'd said to me, I was running the institutional sales side up in Sydney, and he said, "Hey Geoff, I think he told me he'd really like to work on the option desk that we had." And then I was just leaving the office, and he happened to be leaving with me one day, and he said, "Oh, how's your day?" And I said, "Oh, it wasn't bad. I've got to put an ad. I've got to talk to a headhunter. We need a young guy on the dealing desk." And he said, "I'd love to do that." And I said, "Oh, I didn't ask you because I thought you want to be on the option desk." He said, "I just want to get out of research."
Yeah.
And to me, it's so important. And with FutureGen, when I saw that concept in the UK, like I came back to Australia and I spoke to a number of people about the concept, and I actually ran across some other people that were thinking about the concept as well.
Yes.
And to me, it's that communication. It's talking to people about it. If you have a concept or an idea, and also in terms of, I think you said at the start about like who's shaped your life. And I suppose one of the great things my dad delivered is he never worried about who he spoke to, like in terms of communicating with up or down in terms of the social network we operate in. So to me, and when you come across these people, like when I became a member of the stock exchange, I had to pay myself because my broker wouldn't pay, which is good in the end because then I got 166,000.
Oh, so it was a win there.
Yeah, a big win. I got the shares. But when I became a member, I rang the chairman. It was Morris Newman, and he didn't know who am I from a bar of soap. But I rang him and said, "Hey, look, I'd like to buy you lunch." So to me, any opportunities like that. And years ago, when Malcolm was at Goldman's, I think after he left Goldman's, there was a little listed company he was involved in, and we helped do something on that listed company. And I met him, I think we were both in New York at the same time, and this is years ago. And so then I said, "Hey, Malcolm," rang him up and said, "Look, I'd like to buy you lunch." And I was just fascinated in people's stories.
Yes.
And I worked at Potter's for a little while, and unfortunately I never met Sir M. Potter, but I was fascinated with his story. He was always entrepreneurial, looking for opportunities. And to me, it's if you can come into contact with someone that you're interested in. Oh, and remember remember David Clark, Macquarie chairman?
Yes.
He was chairman of a board, McGuigan Wines, and we had helped raise them some money. And so I met David that way. And I said, "Look, David, I'd like to buy you lunch." So I bought a lunch, and what I got out of that lunch, I was just interested in their story.
Yes.
I suppose just like this story here, and I was just interested in what drives them, why they did what they did, how they got where they did, and try to, I suppose, pick little bits of that up and utilise it to help guide whichever way everyone wants to go.
It's been a fantastic chat, Geoff, and I really do appreciate your honesty and your just transparency around, and there's such an element of humility with this as well. And on behalf of Euroz Hartleys, this is an absolute privilege to be able to sit here and just have this chat and understand a little bit about the swings and roundabouts you've been through in life and what you've been able to pick up from them and what's taught you things and what's shaped you. What I think the listeners will also take away is that it didn't all come easy. And there's a lot of swings and sliding door moments that you've highlighted that it might have been different.
Good. Yeah,
It's pretty
fair
interesting. It's really interesting. So,
Well, it's a journey. We can do it. So I'm 65. We can do it in another 65 years. See what I do in the next 65.
I would love to do that. I don't know how we'll go, but wherever we go.
That's right. Good man.
Geoff, so on behalf of us at Euroz Hartleys Finding the Front, thank you immensely for taking the time out. You know, you are here for, as you say, less than 24 hours. You've squeezed in some time with us. It's been very generous and we really do appreciate it. So thanks.
Total pleasure. And, hey, great to be in this God's country. Thank you.
Good on you, mate. Thanks a lot.
Thanks, Tim.
Thanks for listening to Euroz Hartleys Finding the Front. This podcast is for general information purposes only. Please check out eurozhartleys.com for more information. Euroz Hartleys holds Australian Financial Services Licence 230052.